Good morning, guys. This is Joe from New York Trading Room. You can see the best trade right now, New Zealand yen.
Welcome back. Shares in Chinese EV maker Xpeng are gaining sharply in Hong Kong, and we're up in US trade overnight. What are they up? 10% on the listing and 8.3% on the ADR after a third quarter revenue beat. However, it reported a greater than expected loss of 1.77 yuan or 27 cents per share versus expectations of a loss of 1.17 loss. The startup wants to become a global name, with half its vehicle sales coming from outside of China, Jeff.
A committee in the European Parliament has given the green light to a tougher Digital Markets Act, which sets out a rule book for the largest online tech firms. If agreed by the wider Parliament in December, the strengthened act would ban targeted advertising to minors and put a brake on so-called killer acquisitions. Firms in breach of the rules would be fined up to 20% of their global revenue, compared with the original 10% here. If anything, it will only increase suspicions in the United States that this is targeted at American tech companies that are trying to do business within the EU. And it will add to those who feel that the digital world is becoming increasingly balkanized now that the Chinese have taken a much tougher line on their own domestic and international tech companies.
There's a couple of points here. And again, I'm a fan of competition. I am an enemy of monopolies, but I like to think I am anyway. I like to see an open marketplace. But who is what are the European options when you are taking down the big US tech, when you're taking down Amazon, when you're taking down Google, when you're taking down Microsoft? And that's the point, isn't it? If you are trying to create a situation where there is space between the big US techs and emergent European companies, you've got to say, well, who are those emergent European companies coming up the rails on the same cost structure, the same business model or better business models to take that space if you create a vacuum? If you take away without giving thought to what else is going to come in its place, you're only going to be at the detriment to the consumer. One thing I will say is I've taken a look at Google share price every single time Margrethe Vestager has come down on them for whatever it is, whether it's the browser, whether it's the advertising, whether it's the new initiative as well. And do you know what? Every single time Google share price, either on the day or thereafter, rallies hard. This is a company now worth 1.94 trillion US dollars. Where is the European company coming that's going to take them down, or at least take a share of their market if indeed more draconian rules come in? And I don't know the answer to that.
And there isn't as you point out, there isn't a local European competitor of size and scale, but there isn't really a Chinese competitor that has the same market access in the EU as well, or is offering the same proposition. So at the moment, it is largely just a case of one or two tech giants that seem to dominate that part of the industry. We've got to take a break. We'll be back in just a moment. Still to come on the programme, it is crunch time for German coalition talks, apparently, with an announcement on the new government expected soon. We'll have more when we come back.
We did couple trade on the gold today early. So you can see we took long here, the market went down, I took another long, and we get out here with 696 and 146. So we did about 846. So far we're almost there. Our target 15,000 this month. Now we have 14,600 and we still have 1 week. If I see any trade, I will take it now. If not, maybe we can trade Forex. In case if you missed it in Asia, we are in a few trades. I will share it with you right now. The first trade, we are in dollar yen long, and so far we are 90 pips. We are in dollar shift long, we are 44 pips. And the pound dollar, we are 21 pips. And the euro pound, it's 22 pips right now. And the euro CAD, we are about 55 pips. And last trade Aussie CAD, we are up 19 pips. So it was very weak and busy week and a good week so far. Remember, tomorrow half day, a lot of people traveling in US. Thursday, it's a big holiday, like a Christmas, the second holiday, biggest holiday in US, Thanksgiving. So a lot of people off this week until next Monday. Now, I just want to see where is the US market. You see, I told you yesterday, usually Monday and Tuesday, the market is going to go higher in US markets. So it's been doing like that for last 20 years. Euro dollar also is going higher, usually on Thursday and Friday. So we have big option here around 112.20. Yesterday we never touched this line, and it's been holding so far, and they defend this line. Today we have option around 112.00. So you keep your eye on this. If we get close to this line, you can do a buy, and your target will be 80 pips. And you can put your stop loss under 112. So it's very risk trade. Okay. And if I see anything, I will let you know.
And we are below the 5-year average at the moment, which makes the oil price dynamic for many traders and certainly for the producers in OPEC Plus makes them very excited. So the fact of the matter is we were already below that level, the 5-year average of our inventories, before this move as well. And as Jeff pointed out to me off air, and we shared this earlier on as well, the fact is if you've got more supply coming onto the market from those people who are consumers, then those people who are producers can just literally tweak the taps and say, okay, we'll offset that by not producing as much or not selling as much or not putting as much on tankers. They've got the whip hand at the moment, I'm afraid. They are the ones who are controlling this price. So what happened on the price? Jeff's question. Spend too much time in my free time looking at the oil price. But we were at around about 78.70 to 79 bucks before the announcement there, if you can really see. And then we rallied, basically, and we're still rallying. So we've rallied between $3 and $4 on the back of that announcement. That's not actually going to get gasoline prices down in Oklahoma, in Kansas, in Michigan, is it? Or is it? Am I missing the point? And the other thing I'll say about this is quite extraordinary as well. What happened to the supply response from shale? Well, I know what happened to the supply response from shale. And despite what the Energy Secretary said to me at COP26, the seeds of this were not sown in COVID at the start of last year. The seeds of the decline in the preeminent position of shale were sown about 2 years earlier, when actually the infrastructure spending on shale started to abate very, very aggressively. Let's have a look at gasoline prices. Okay, RBOB gasoline, $2.33, and the deck delivery or deck futures on that one as well. But again, pump prices, as you all know, are significantly higher than that, especially if you are further away from Louisiana and Texas, where most of this stuff is refined, and where most where most of it actually is where you have the strategic reserve. Let's get to NBC's Tom Costello, who filed this report on Biden's decision to tap the U.S.'s strategic reserves ahead of the Thanksgiving holiday.
It's the largest release ever of the U.S. Strategic Petroleum Reserve, or the SPR. The president tapping 50 million barrels, hoping to drive down prices at the pump.
It will take time, but before long, you should see the price of gas drop where you fill up your tank.
But 50 million barrels is roughly the equivalent of what Americans go through every 2.5 days. The SPR is normally reserved for emergencies like wars or hurricanes that disrupt the national supply. This is the first major release for a non-emergency. The United States coordinating a global response to rising fuel prices, partnering with India, Japan, South Korea, the United Kingdom, and China to also release more oil, hoping to force OPEC to pump more to meet demand.
Critics are going to charge the president with making more of a political than an economic move, because a move of this size is unlikely to help oil and gas prices in the long term.
Unleaded is now averaging $3.40 a gallon. A year ago, it was $2.10 during the economic slowdown. If you're driving from here in Tampa to Atlanta, that's 456 miles. The typical car averages 25 miles to the gallon. So a year ago, you would have paid $38 in gas. Today, $62.
They are really high, and what can we do, Hang in there.
The president accuses the oil and gas industry of price gouging Americans, just as 48 million are driving over Thanksgiving. Meanwhile, across the country today, mostly clear skies and packed airports. The TSA screening more than 2 million people each day since Friday, the highest since the pandemic began. Sunday will bring the most passengers yet. And today, the TSA chief tells NBC News 93% of screening officers are now vaccinated. Those who aren't will not face immediate termination.
No, we aren't going to pull any unvaccinated people off the line. And I expect to have no impact whatsoever for Thanksgiving travel or through December for the travel periods there.
Welcome news as many families gather for their first Thanksgiving in 2 years.
Let's get to Beth Evans, Global Director of News at S&P Global Platts. Beth, did this work as the oil price rallied around about 4% on the back of it?
No. As they say here in London, bit of an own goal. Platts Analytics is actually expecting OPEC to now respond by basically putting less oil into the market. I mean, the expectation was that they were going to take a look very soon, actually, early December, at their plan to kind of drip feed 400,000 barrels per day of oil every month to the market and temper that with what demand looks like. The guess now is that, well, this oil has come out, even though it's not a significant amount, as you've said earlier in this program, but it is something. And so OPEC might actually not add that 400,000 barrels per day now.
In terms of why the president did this, why India is doing this, why the UK of all people did this as well, this is purely a stop to consumers, isn't it? And if we don't see gasoline prices decline, I mean, average price of gasoline, I don't know, where is it at the moment, 340, 350 in the US at the moment as well. If they don't decline, is this going to be a challenge to the potency of the White House?
Yeah, I mean, it certainly has political overtones written all over it. This is also an announcement coming right before Thanksgiving, right before the biggest travel day of the year for Americans. And right at the time when the US average for regular grade gasoline is expected to peak at $3.32 a gallon, which is the highest since September 2014. So I'm sure the Biden administration has taken all of this into account. The thing that people don't take into account is that it's not just about throwing oil onto the market. Oil is not just one kind of commodity. It is a lot of different commodities. It's not about the quantity as much at times as the quality. So when you look at the oil that's coming out, not all refineries globally can take all the oil that comes out. They have different types of rates and different types of equipment, so they can't create gasoline in this case, or heating oil or whatever necessarily from the oil that's being released.
Beth, let me ask you the other aspect to this, which we're still waiting to see what ultimately happens. Is Biden talking?
Okay, guys, dollar yen, the Japanese exporter, they have like offer around 115.30. So for 15.30, I guess they're gonna defend this line here. This is option for today, 15.30. The market went down so far to 87. And also they have offer around 15.50. So I don't think the price is gonna get higher than 15.30 or 15.50. And they buying around 1,500. They have buy order 1,500 and 1477. And 1440. So I guess this is the range is gonna be, if we break the line here, we're just gonna get the hit, the next one. So just keep your eye. You can trade between those black line. It's $1.5 billion, around 1440 and 1490. 1550, $1.6 billion. So you keep your eye on those lines. Okay, you can, if the market going higher, you can sell here, sell here. If the market going lower, you can just buy this at this line, you put stop loss under it. If we hit this line, we're gonna test this line very quick. If it doesn't hold, we're going to this line. So this is the lever today for the dollar yen. The Japanese exporter and importer, and they have an offer and bid and at this level. Just a quick update on dollar yen. We are long from 1424, if you remember. And right now it's 1490, so we are up. Like we are 1490, so we are up 66 pip. We took long the other trade. Euro CAD, we are up 50 pips. Okay, and here is the stop and target, and you can see everything on the chat room. So I guess that's it for today, and have a great day, everyone. I will talk to you on the chat room.
Phase out coal by 2030 as part of their upcoming coalition deal, according to Reuters, which has cited sources familiar with the matter. The three parties have also pledged to end power generation from gas by the year 2040 and allow the production of blue hydrogen. The country's new government could also form a climate ministry to oversee energy policy. Annetta is with us from Berlin. Annetta, let's just refocus on that meeting that has been called by Angela Merkel. Are we expecting there to be any fresh announcements around COVID lockdowns?
I don't think we are getting direct lockdowns on a federal level here in Germany, but what we are getting are more restrictions, most likely, because clearly the infection rates are surging and the hospitalization rate is going up as well. So I guess what we are going to see are local lockdowns, which we are already having in place in parts of Baden-Württemberg, which is close to Stuttgart, but also Saxony is in complete lockdown. We have a quasi-lockdown in parts of Bavaria, where infection rates are at the highest level in Germany. So I guess what Angela Merkel was concerned about, and when she summoned